Hey, how's it going? So in this video, I'm going to give an update on how many shares of Palantir it might take to retire by 2030. Now, a couple months ago, I made a first video breaking down what some of the possible scenarios might be. But in the interim, inflation has increased significantly, the Palantir stock has been battered down, and I've received a few comments on that previous video suggesting that it wasn't as conservative as it could be. So I think it would be good to update the numbers on how many Palantir shares it might take to retire by 2030 to reflect these new realities and also to make everything just more conservative and incorporate a larger margin of error. An important note here is that this is just a thought experiment to see how many Palantir shares it might take to retire by 2030, and I am by no means suggesting that anybody should pin their entire retirement hopes on one single stock. Okay, so how much money do we need to retire, and how many Palantir shares does that translate to by 2030? Well, in my previous video, I indicated that if we had $700,000 invested in Palantir by 2030 and assumed that there would be an 8% per year inflation adjusted perpetual growth rate, then that would mean we could spend 25 years in retirement. But those figures maybe don't account for the extent of the inflation that we're seeing now between today and 2030 and also beyond that. And this is the new model that I'm working with. So you can see that the top line total amount that the goal is to have invested in Palantir by 2030 in this thought experiment would be $1.3 million as opposed to $700,000. And the way that I'm getting to that is that according to the data today, the average household spend is about $5,000 per month in today's dollars. Now, if we account for inflation between now and 2030 and assume that there's going to be a 5% per year inflation rate over that approximately 8-year period, which by the way is pretty conservative because while we're seeing inflation that's higher than that in the past couple of quarters, it is unlikely that that super high inflation rate would continue for the better part of a decade, especially when most central banks around the Western world have a goal to keep inflation at around 2% per year. But even if we assumed that there was 5% per year inflation between now and 2030, that would mean that the monthly living expenses would increase to an average of about $7,500 per household in the US, which equates to $90,000 per year, and that's in 2030 dollars. And another way that I've made this updated model slightly more conservative is that I've bumped up the number of years spent in retirement from 25 to 30, which is well above the average of 18 years in the US. But if we assume that we're spending 30 years retired, then at $2030 with $90,000 per year in expenses, that means that we're going to need to spend $2.7 million over the course of that retirement. But we don't have to have that much invested by 2030. We only need to have 1.3 million. And let me show you how that works with this retirement calculator. So if we start with $1.3 million at 2030, and if we assume that we're withdrawing $7,500 per year in 2030 dollars for 30 years with an inflation adjusted 6% per year perpetual growth rate. And when I say inflation adjusted, that means that these figures are all presented in 2030 dollars, but of course the actual rate of return is much higher. And the 6% figure that I'm using here is significantly lower than the inflation adjusted S&P 500 average return, which hovers around 8%. So we're chopping off 2% here to be even more conservative and to potentially account for an even longer term increase in inflation. And if we look at the figures here with the frequency of withdrawals per month and the interest compounded annually, you can see that the investment amount draws down gradually over time, leaving you with approximately $120,000 at the end of the 30th year. And this is the power of compound interest that allows somebody to spend over $2.7 million in a 30-year period by investing only $1.3 million. And just for the argument's sake, if we change this to $1.5 million, you can see that actually the amount of the total principal would barely have decreased. So really, that compound interest has a massive, massive impact. And the more that we add to this, the larger the margin of error. So with these figures, which I truly believe are reasonable, and in fact, I believe that somebody could actually live off of much less, but this is our target, $1.3 million to have invested in Palantir by 2030. And then what does that translate to in terms of the number of shares that we would need to have? Well, in order to figure that out, we have to have some valuation models for what Palantir could be worth by 2030. So here's the valuation spreadsheet. We've got the current actual market price of Palantir shares up here in the right-hand corner, and then I've got 5 different possible scenarios for what the company could be worth in 2030. They're the super bear, the base, the bull, and the super bull. And I've modified these slightly from the last Palantir retirement video to reflect some new information that's come to light. Also, another thing to mention here is that I said the goal was $1.3 million, but to make it even more conservative, I'm incorporating an additional 10% contingency here. So the actual goal that we're working with is $1.43 million. That's how much money we need to have invested in Palantir by 2030. If we have a 6% per year inflation adjusted perpetual growth rate, then that will allow us to retire and live according to the average American household budget. So let's start with the super bear scenario and then work our way up. Now, I've included my sources for the valuation models in these different scenarios down below, and I'm actually going to post a link to this spreadsheet in the description box of the video so that you can check it out for yourself. And another important thing to note here is that I have not included capital gains tax here for a couple of reasons. First of all, I think it's definitely possible that all of this investing could be done in a tax-free account, so a Roth IRA in the US or a TFSA in Canada. Also, since there's so many different jurisdictions with different tax rates, it's really impossible for me to say how much you would have to pay in taxes. So if you think that you can invest in a tax-free account and that you would need to pay capital gains taxes, what I recommend is to just download a copy of this spreadsheet, which will be linked down below, and then add that in for yourself for your own personal circumstance. Okay, so the super bear scenario here. Now, I've just left this blank and thrown all zeros here because I've actually seen a number of people commenting in my other Palantir videos that they think the company is going to nothing. Now, really, if you think that that is the case, then obviously none of this matters. So I'm not even going to address this here. Of course, it is possible. All companies could potentially fail. I personally don't believe that there's a chance in hell that Palantir is actually going under based on the impeccable financial position that the company is in. But it is technically possible. Now, moving on to the bear case scenario for people that believe the company will continue to exist, but that maybe don't think that it's going to do quite as well as all of the bulls on YouTube like to say that it will. Well, I've pulled a valuation model here from the NASDAQ website where they suggest that by 2030, Palantir could have a valuation of around $70 billion. Now, if that was the case, and if Palantir has an approximately 2% per year issuance rate in the overall share count, which means that they'd be issuing 2% new shares per year and not having any buybacks. If that came to pass, then the price per share would be around $31.80 or let's say $32. And at that price, you would need 44,943 shares of Palantir to retire by 2030, which if you were to buy today would cost you just under $500,000. Now, if that seems daunting or unfeasible for you, don't worry, because that is the most bearish of the projections that I've seen for 2030 and beyond. Or at least it's the most bearish Palantir prediction that I've seen that actually assumes the company will continue to exist. But let's move now to the base case model. And this is actually coming from a Seeking Alpha article that includes a valuation model that suggests that Palantir could be worth around $150 billion by 2030. Now, if that was the case, then the price per share would be around $68 and you would need approximately 20,900 or let's say 21,000 shares to retire. At today's price of $11.04 per share, that would cost you around $230,000. So now we're getting into the realm of what might actually be possible for a retail investor that doesn't have millions of dollars to invest in the stock market. Okay, let's move now to the bull case scenario though. And the valuation here is coming from a DCF model by an investment banker named Sebastian Howarth. Sorry if I'm butchering that last name, but he did an interview on Amit's YouTube channel, who's a YouTuber that does excellent Palantir content. Definitely recommend checking him out. So Sebastian created this DCF model where, according to the numbers in the base case, if we assume a 30% per year growth rate in Palantir's revenue, which by the way is what they're projecting, then the company could be worth approximately $100 per share in 2030. And in his bull case scenario, if Palantir's revenues grow 36% year over year as opposed to 30%, then the company could be trading at a stock price of $263 per share. Now, if we split the difference there and actually go much closer to Sebastian's base case model in his DCF, then that would mean that Palantir's overall market cap could be $250 billion by 2030 with a share price of $113 per share. And if that was the case, then you would only need 12,500 shares to retire, which costs, according to today's prices, approximately $140,000. And then of course we have the Super Bull valuation model. And for this one, I'm pulling from a couple of other YouTubers, including Tom Nash and Palantir Vision. There's a lot of content out there suggesting that Palantir could potentially be worth $500 billion or even $1 trillion by 2030 or beyond. Now, I'm gonna go with the much lower figure of those two, and Tom Nash has a number of videos where he justifies some of these price targets, so I definitely recommend you checking out his channel if you have time. But if Palantir has a market cap of $500 billion by 2030, then the price per share would be $230. And if that were the case, you would only need 6,292 shares to retire, which at today's prices costs less than $70,000. So these are the numbers here. These are the different scenarios for what could come to pass over the next 8 years or so. And remember that a lot of the assumptions that go into how much money we might need to retire by 2030, I think are relatively conservative and definitely reasonable. Now, whether or not you believe that, for instance, the bear case or the super bull case is more likely to come to pass is up to you. I think at the higher end of the extreme there, it might not be so likely, at least maybe not by 2030. But then at the other end of the spectrum, where people suggest that Palantir is going to zero, well, I think that's even less likely. Now, I may be biased here because I'm a Palantir investor, and I'm definitely very bullish on Palantir for reasons that I've outlined in many other videos on my channel. But regardless, hopefully you enjoyed this video and found it helpful. And remember, I am not actually advocating for anybody to put all their retirement eggs in a single basket. This is just a thought experiment. Thanks so much for watching.
That's all I have to say about that.